Welcome to Iraqi Dinar News, where you'll receive real and authentic updates about the Iraqi Dinar. If you want to stay informed with moment-by-moment developments, make sure to subscribe to the channel and like the video. Today we're analyzing an important development involving Iraq's transition from a cash-heavy economy toward digital financial systems, and what this could realistically mean for the Iraqi dinar and the broader monetary framework inside the country. According to recent reports, Iraqi television programming is now actively educating citizens on how to move from physical cash usage toward digitized financial tools. Officials are describing this as a quantitative step toward financial transparency. At the same time, there are discussions suggesting that the Central Bank of Iraq may be conducting what is being described as a final sweep of US dollars circulating inside the country, alongside preparations related to lower denomination notes and a potential new rate. Let's break this down carefully and separate structural economic reform from speculation. First, the shift from cash to digitization is not unusual in modern economies. Around the world, central banks and finance ministries are working to reduce dependence on physical currency. Digital payment systems improve traceability, reduce corruption risks, strengthen tax collection, and help regulators monitor money flows more effectively. In Iraq's case, this effort aligns with long-standing reform goals supported by institutions such as the International Monetary Fund and the World Bank, both of which have emphasized transparency and modernization in Iraq's banking sector. Iraq has historically operated as a heavily cash-based society. A large portion of daily transactions, government salary distributions, and private commerce have relied on physical Iraqi dinar notes and, in many cases, US dollars. The use of the dollar inside Iraq has been particularly significant. Since 2003, the US dollar has played a stabilizing role in trade, savings, and large transactions. However, dollarization also creates challenges for monetary sovereignty. When citizens prefer holding dollars instead of dinars, it limits the Central Bank of Iraq's ability to fully control liquidity and inflation through domestic policy tools. If Iraqi state media is now actively encouraging citizens to bring foreign currency into the banking system and transition toward digital channels, this suggests a coordinated monetary tightening and compliance effort. It could indicate that authorities want to reduce unregulated cash holdings, improve documentation of foreign exchange flows, and consolidate dollar transactions under official supervision. Now let's address the mention of a final sweep of the American dollar. From a policy standpoint, what this likely refers to is intensified enforcement of foreign exchange regulations. Over the past few years, the Central Bank of Iraq has implemented stricter controls over dollar auctions and cross-border transfers. This was partly in response to concerns about illicit flows and sanctions compliance. Strengthening oversight over the dollar market helps stabilize the spread between the official exchange rate and the parallel market rate. If authorities are indeed pushing to bring more dollar holdings into the formal banking system, that would support exchange rate stability. When more transactions occur within regulated banks rather than informal markets, the central bank gains clearer visibility over supply and demand conditions. That reduces volatility and strengthens confidence in the monetary framework. Now let's discuss the reference to lower denomination notes and a new rate. This is where careful analysis is essential. Lower denomination notes have long been part of Iraq's monetary reform discussions. Introducing smaller notes typically becomes practical when inflation is controlled and purchasing power stabilizes. If a country wants to facilitate everyday transactions without relying on large bills, it must ensure price stability and public trust in the currency. However, the introduction of lower notes does not automatically mean a dramatic overnight revaluation. Monetary adjustments are complex and depend on multiple factors, including foreign reserves, fiscal stability, oil revenue performance, inflation trends, and political stability. Iraq's foreign currency reserves have remained relatively strong in recent years due to oil exports, which provides a solid foundation. But structural reforms, banking modernization, and anti-corruption measures are equally critical. In the short term, the push toward digitization could have several practical effects. First, it may reduce cash hoarding. Second, it may tighten liquidity conditions in informal markets. Third, it could narrow the gap between official and street exchange rates if enforcement is consistent. For IQD followers, this suggests that the central bank's immediate focus appears to be stability and compliance, not speculation-driven currency shifts. Digitization also improves tax collection and financial inclusion. When transactions move through digital platforms, government agencies can better track economic activity. This increases state revenue and strengthens budget management. Iraq's economy remains heavily dependent on oil exports, so diversifying revenue sources and formalizing domestic economic activity are essential for long-term sustainability. Over the longer term, successful digitization could support a stronger and more credible dinar. A transparent financial system attracts foreign investment. Investors evaluate currency stability, banking efficiency, and regulatory clarity before committing capital. If Iraq demonstrates consistent monetary discipline, strengthens anti-money laundering frameworks, and reduces dollar dependency, confidence in the dinar may gradually improve. It is important to emphasize that major currency value changes typically occur gradually and are backed by macroeconomic fundamentals. Sudden, extreme shifts without structural support can destabilize economies. Responsible central banks prioritize stability over shock adjustments. For Iraqi citizens, digitization means easier salary transfers, safer savings storage, and potentially expanded access to credit. For businesses, it means more efficient payments and improved integration into regional markets. For the government, it means better oversight of public funds and reduced leakage. For international IQD observers, the key takeaway is that these developments indicate ongoing reform rather than an immediate dramatic currency event. Strengthening monetary control, reducing informal dollar circulation, and preparing lower denominations are components of modernization. They suggest the central bank is working methodically to build infrastructure that supports a stable currency environment. At the same time, risks remain. Political tensions, regional instability, and global oil price volatility can all affect Iraq's fiscal position. Since oil revenue accounts for the majority of government income, a sharp decline in energy prices would pressure the budget and foreign reserves. Therefore, any discussion of exchange rate changes must be viewed within the broader economic landscape. We should also consider public trust. For digitization to succeed, citizens must trust the banking system. That requires cybersecurity protections, reliable infrastructure, and consistent policy communication. If implemented effectively, digital reform reduces corruption and increases efficiency. If implemented poorly, it can face resistance. Public education campaigns on national television suggest authorities understand that behavioral change requires communication. In summary, Iraq's push from cash to digital systems represents a structural reform aimed at transparency, compliance, and monetary stability. Efforts to bring foreign currency into regulated channels strengthen oversight of the exchange market. Preparations involving lower denomination notes may signal readiness for future monetary normalization, but any adjustment to exchange rates would depend on sustained macroeconomic stability. For those following the Iraqi dinar, the focus should remain on fundamentals, reserve levels, fiscal discipline, inflation control, and regulatory reform. Sustainable currency strength is built on economic performance, not speculation. We will continue monitoring official statements from the Central Bank of Iraq and credible financial institutions to provide balanced and factual updates as developments unfold. If you value responsible and analytical coverage of Iraqi Dinar news, make sure to subscribe and stay connected for future updates. And as always, This content is provided for informational purposes only and does not constitute financial advice.